Some traders often chase fast profits on the lower time frames, scalping in and out of the market within minutes. Others take a calmer route, watching price movements unfold and trading purely off price action, no indicators. But here's the thing. What if you could do both? What if there was a simple, no-fluff strategy that combines the speed of scalping with the clarity of price action? In this video, I'm going to walk you through exactly that. A beginner-friendly method using just a trend line and one of the most reliable chart patterns out there. The double top and the double bottom. 2 touches, 1 level, and a powerful signal the market doesn't want to break through. Stick with me, because once you understand this setup, you'll start seeing high-probability trades in places you never noticed before. If you're serious about becoming a profitable trader, hit that like button and subscribe because we're about to disclose one of the market's most concealed strategies. Let's get right into the video. Let's start with something simple but powerful. A double top pattern forms when price rises to a certain level, gets rejected, pulls back, and then climbs again, only to get rejected at that same level. It's like the market is testing a ceiling it just can't break. That level becomes a strong resistance zone, where sellers clearly dominate. Eventually, buyers give up, and the market starts to reverse. Now, flip that logic upside down, and you've got the double bottom. Price dips to a low, bounces back up, then returns to test that same low, but can't break it. That tells us there's demand. Buyers are stepping in, and just like that, you've got a solid support level and a potential trend reversal in the making. So why do these patterns even matter? Because they hint that momentum is fading. The market is trying to push forward, but it's running out of steam. On a 5-minute chart, you'll often see the price stall after forming a double top, then start moving in the opposite direction. These patterns are like a red flag waving, saying, hey, something's about to change. And when they form clearly, they often lead to strong reversals. But here's something every trader needs to understand. Not all double tops or bottoms are picture perfect. In fact, it's rare for the price to bounce exactly at the same level twice. What you will often see instead is a fake breakout. And this is where things get interesting. A false breakout makes it look like price is going to break through. But then it suddenly whips back in the other direction. It's a classic trap, one that catches a lot of beginners. They jump in thinking the breakout is real, only to get stopped out moments later by the pros who know better. As a price action trader, your job is to spot these traps and use them to your advantage. A big mistake many beginners make is trading a double top or bottom too early, the moment the second top or bottom appears. But here's the truth. The pattern isn't confirmed until the price breaks the neckline. For a double bottom, the neckline is the high between the 2 lows. For a double top, it's the low between the 2 highs. When the price breaks this level, that's your signal. That's when you know the market is ready to reverse and you're no longer guessing. Now that you understand the pattern, here's where things get fun. Let's use it for scalping. The most trading influencers and the different videos you have watched will teach you that double tops and bottoms are for reversals. And that's true. But I like to take it a step further. I mostly use these patterns as continuation signals within a trend. Sounds crazy? Let me explain. If you've got a strong trend, whether it's up or down, and a double top or bottom forms near that trend line, it can actually mean the trend is ready to keep going. But first, you need to identify that trend. So to identify the trend, you will have to jump onto a lower time frame and draw your trend line. In an uptrend, you will draw it beneath the higher lows. In a downtrend, you will draw the trend line above the lower highs. If you're not sure how to draw proper trend lines, don't worry. We have got a full video on everything you want to know about trend line. I will leave the link in the description below. You can go watch that video first and then come back to this one. Now, once your trend line is in place, this is where the magic happens. You wait for a double bottom or double top to form close to that trend line. If you're in an uptrend, you're looking for a double bottom. In a downtrend, a double top. These setups are powerful because you're aligning a strong pattern with the dominant trend, and that's a recipe for high probability trades. Let's walk through a long setup. Imagine we've identified an upward trend on the 5-minute chart. We patiently wait. And then we spot a double bottom forming right at the trend line. This is your moment. Why? Because we already know the market's trending up, and now the price is bouncing off both a key support level and the trend line. You enter when the price breaks above the neckline, but don't jump in just yet. Here's what separates pros from amateurs. Wait for the retest. After the price breaks the neckline, it often comes back down to test it as new support. This is where you want to enter, not on the breakout itself. The retest gives you better risk to reward. If the neckline holds, that's confirmation. That's your edge. You might be wondering, what if the pattern doesn't form right next to the trend line? That's okay, as long as the price hasn't strayed too far from it. If it has, chances are it'll snap back or consolidate, and your setup becomes less reliable. But if the trend line is still relevant, the setup is still valid. Now let's check out the opposite side of the setup. You've got a downward trend line on a lower time frame. Price forms a top, pulls back, and then forms a second top, close to the trend line. Then this time you will draw the neckline, the low between the two tops, and wait. When the price breaks the neckline and retests it from below, that's your short entry. As always, protect your trade with a stop loss. A smart place to put the stop loss is just above the second top. You can make it tighter if you're willing to take on more risk. Here's something I can't stress enough. A double top isn't real until the neckline is broken. Until then, it might just be a sideways range. Jumping in early is how many traders get burned. Always wait for that confirmation candle, and ideally with volume backing it, to show that the move is legit. Speaking of volume, it's a great extra confirmation, especially during the neckline break. Just keep in mind that volume indicators tend to lag a little, and when you're scalping, speed matters. That's why price action, raw, clean, and real-time chart is such a solid approach. Go ahead and join our Telegram channel and get access to high-quality, expert-curated trade signals every single week, but that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently, so click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown of new insights, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned, I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.